Welcome to the Deep Dive, where we take a stack of your sources and really pull out the most important nuggets of knowledge for you. Today, we're doing a special deep dive specifically for you, our investor listener. We're looking at a really fascinating, definitely high volatility stock that's been making some serious waves in the AI space. We're going to try and pull back all the layers on SoundHound AI, ticker SOUN. The goal here is to help you really understand what's actually going on behind the headlines, cut through some of that noise. We'll look at the company itself, its financials, the industry it's in, and maybe lay out some potential scenarios for its future. It's all about giving you clarity.
That's absolutely right. Our mission today is simple. Give you a clear, comprehensive picture of SoundHound AI, drawing directly from some pretty detailed analysis. We want to help you make sense of its trajectory and really where it fits in the current market landscape. What's truly, I think, captivating here is how SoundHound's story isn't just about their tech. It's almost like a microcosm of the whole AI revolution playing out.
Okay, let's unpack this company first then. For someone who might have heard the name but isn't totally clear on what they do, what exactly is SoundHound AI? What's their core business?
Yeah, so at its heart, SoundHound AI is a leader in conversational AI. They specialize specifically in voice AI technology. Think of them as the architects behind the scenes. They build these sophisticated voice interfaces so businesses can interact more, let's say, naturally and efficiently with their customers. Their tech is pretty versatile, actually. It's integrated into, well, all sorts of sectors, from the voice commands in your car, your smart TV, to intelligent responses from IoT devices around your house.
And they've got some big names associated with them, right? Or at least one very notable one. That usually gets investors' attention.
Absolutely. Yeah, the big one everyone talks about is them being an NVIDIA invested company. And look, this isn't just a simple thumbs up. It's more of a strategic alignment. It often means access to, specific AI models, specialized hardware, maybe even early looks at new chip roadmaps. For a company like SoundHound in such a fast-moving space, that NVIDIA connection can be a real competitive edge. It signals a major player sees serious potential there.
Okay, so if they're building these AI tools, what are the main products and how do they actually make money from all this? What's the revenue model?
Right, so their core offerings really fall into a couple of key areas. First, there's the Houndify platform. Think of Houndify like a sophisticated toolkit. It licenses APIs and SDKs, basically the building blocks, so other businesses can plug SoundHound's voice AI right into their own products. Could be a custom voice assistant for an app or, an integrated voice system in a new car. Then second, they offer cloud-based voice recognition services. Here, they make money based on usage. The more a business uses their AI processing in the cloud, the more SoundHound earns. And finally, they also do professional services like custom development, consulting, tailoring tech for specific client needs.
That sounds like it could be used almost anywhere. So where is this technology actually being deployed right now? Are there specific industries where they're really making an impact, seeing significant revenue coming in?
Yeah, that brings us to a really important point about their revenue mix and where they're focused. As of 2023, the revenue was pretty spread out, about 40.6% from licensing Houndify, 40.0% from hosting, and 18% from those professional services. Industry-wise, the automotive sector really stands out. It's their largest, making up 43% of revenue. Think big partnerships like Stellantis and Kia. Their AI is powering systems in millions of cars.
Wow, 43% from auto.
Yeah, it's huge. Then the fast food, or QSR sector, is also really significant, 29% of revenue. They've actually secured deals with 7 of the top 20 global QSR brands for voice ordering systems. And finally, healthcare. It's smaller at 15%, but it's growing rapidly. Think voice-enabled patient care or admin tasks. So they've carved out some strong niches.
Okay, let's switch gears. Let's talk numbers, because that's, where the rubber meets the road for investors. How does SoundHound AI look financially? We've heard growth, but what's the full picture?
Right, the financials, they really show that classic growth stock story. Strong revenue expansion, but ongoing challenges with profitability. So, for example, their annual revenue hit about $84.7 million by December 2024. And the trailing 12 months, or TTM, revenue just the last year's worth was $102.2 million as of March 2025. That shows consistent growth. And notably, Q4 2024 revenue was $34.5 million. That's a huge 101% year-over-year increase. That kind of triple-digit growth definitely gets attention.
That is impressive growth, especially that year-over-year jump. But I understand there's usually a flip side to that coin with these high-growth companies. What about the bottom line? Are they profitable?
No, not yet. Despite that really significant revenue growth, the company is still reporting pretty substantial net losses.
Yep.
Annual net income for December 2024 was negative $350.7 million, and the TTM net income was negative $188.5 million. Now, this isn't necessarily a fatal flaw for a growth company at this stage. It's mostly because they're investing aggressively in R&D and expansion, pouring money back in to grab market share.
Okay, so given those losses, what about their overall financial health, their stability? Are they on shaky ground, or do they have enough cushion to keep this growth strategy going?
Well, their gross margin seems to have stabilized around 60%. It was even higher in the 70s back in 2023, which is pretty healthy for a software-focused company. Stability-wise, their debt-to-equity ratio is 48%. That suggests a reasonable balance, not overloaded with debt. Their current ratio is super strong, 492%, meaning plenty of liquid assets for short-term bills.
Okay, that sounds good, but
But their interest coverage ratio is negative 26 times, which basically means they aren't generating enough operating profit right now to cover the interest payments on their debt. That's common for growth companies reinvesting heavily, but it's a metric to watch. On the plus side, their cash position improved significantly. They had $225 million in cash and equivalents in Q4 2024, which gives them a much stronger financial runway.
And what does this all boil down to for investors looking at earnings per share, EPS?
While reflecting those ongoing net losses, their TTM EPS is sitting at approximately negative 52 cents per share. So for every share out there, the company is currently losing about 52 cents.
Got it. So for listeners who might be looking for income from their investments, what's the dividend situation here? Is SoundHound paying anything out?
Yeah, stepping back for the income investors listening, SoundHound AI has actually never paid dividends, and they have no current plans to start. This is really standard practice for growth stage companies like them. Instead of sending profits out to shareholders, they're strategically putting every dollar back into R&D, hiring, market expansion. The whole strategy is about fueling future growth, aiming for long-term profitability and, share price appreciation, rather than providing immediate income. It's a trade-off.
Okay, now here's where it gets really interesting for investors. The stock volatility. SoundHound AI is known for these dramatic price swings. What are the key things, the disclosures, the factors that really make this stock jump or drop?
You're right, it's definitely a dynamic stock. There's several key drivers here. Firstly, major contracts and partnerships. Those are huge catalysts. An announcement about, say, expanding work with Stellantis or Kia in automotive, or landing more big global QSR deals, that can send the stock flying. It points to future revenue, market validation.
And earnings reports, I imagine, are always massive for any company.
Absolutely. Earnings announcements are pivotal moments. If SoundHound beats what the market expects on revenue, or maybe shows a smaller loss than predicted, the stock can get a significant boost. But conversely, missing those expectations or maybe guiding lower for the future, that can lead to a really sharp decline. Investors react fast.
What about insider activity? I think I saw something about management selling shares not too long ago. How much should investors really care about that?
That's a great question, and it's a bit nuanced. Management stock sales or purchases can definitely sway sentiment. For instance, there was that public disclosure on June 25th, 2025, showing an executive selling shares. Now, a single sale could just be for personal reasons, financial planning, whatever, not necessarily a red flag. But, a pattern of insider selling could worry investors. It might suggest a lack of internal confidence. On the flip side, insider buying is almost always seen as a very positive sign.
And analyst opinions, like it or not, they still carry a lot of weight, don't they?
They really do. Analyst evaluations and price target changes from firms like, say, Northland, Piper Sandler, H.C. Wainwright, they frequently move the needle. A positive rating, like Piper Sandler calling it overweight, that can drive the price up as more institutional money might follow. But target cuts or downgrades, those can put serious downward pressure on the stock. You just have to remember their opinions, albeit usually well-researched ones.
And what about the technology itself? I mean, this is an AI company. Do new innovations actually move the stock?
Oh, absolutely. New AI tech developments and launches are incredibly positive signals. Things like rolling out more sophisticated AI agents or finding novel ways to apply their existing tech. It shows they're innovating, staying competitive, and it naturally grabs attention from tech-focused investors. Proves we're not standing still in this incredibly fast-moving field.
Let's talk about the investors themselves for a second. How does that mix, the big institutions versus individual retail investors? How does that play into the volatility? It's kind of fascinating.
Yeah, it's a critical dynamic for a stock like SIM. SoundHound actually has a pretty substantial institutional presence. We're talking 587 institutional investors and shareholders. And importantly, their long position share count the number of shares held by institutions betting on the long term increased by over 25% from the previous quarter. It's up to 186 million shares now, over half the company's outstanding shares.
Okay, so big money is increasingly interested. Vanguard, BlackRock.
Exactly. Vanguard, BlackRock, Morgan Stanley are major holders. That signals growing institutional confidence because these big funds do a lot of homework before they invest. However, despite that, the stock still tanked, down over 50% in 2025 so far. Why? Well, it's largely due to broader market sentiment shifting away from growth tech, worries about the ongoing losses, and just general concerns about high valuations for companies not yet profitable. But you're right, the potential in voice AI is so high that both the conviction of these institutions and the often rapid moves of retail investors can cause these huge price swings. That's where a lot of the volatility comes from.
Okay, beyond SoundHound itself, let's zoom out a bit. How do the bigger AI industry trends, or even just the global economy, how do they impact a company like this? They don't exist in a bubble.
Right, stepping back, the conversational AI market itself is just seeing explosive growth. There's huge demand from businesses trying to improve customer experience, automate tasks, cut costs. There's a massive tailwind. We see it in chatbots, voice assistants, AI customer service, all areas where SoundHound plays. This isn't some niche thing anymore. It's becoming fundamental.
And AI adoption just seems to be accelerating everywhere now, not just conversational stuff.
Indeed, AI adoption is speeding up across practically every industry you can think of. Automotive, healthcare, finance, you name it. And voice interfaces specifically are becoming really crucial for convenience and accessibility. People just expect to talk to their devices now, their cars, even ordering kiosks. This broad embrace of voice-first interaction directly benefits SoundHound, makes their tech feel more like a must-have.
I've been hearing a lot lately about on-device AI becoming a bigger trend. What exactly does that mean, and how does that fit into SoundHound's world?
That's a really interesting point. On-device AI is a significant rising trend. It basically means moving the AI processing off the remote cloud servers and onto the actual device itself, the car, the appliance, whatever. This has some key advantages. Better privacy, since data might not need to leave the device. Faster responses, no network lag. And it can work even without internet. For a company like SoundHound, already focused on embedding into devices, developing strong on-device capabilities, opens up critical new opportunities. It lets them serve markets where connectivity is spotty or privacy is paramount. It could be a real differentiator.
But with all this growth and opportunity comes intense competition, right? How does SoundHound deal with that?
Absolutely. Competition in AI is fierce, putting it mildly. You've got the massive big tech players, Google, Amazon, Microsoft, with enormous resources, infrastructure, R&D budgets. Plus, there are tons of innovative startups popping up constantly. So for SoundHound, it means they need relentless innovation, a laser focus on leading in their specific niches, and smart strategic partnerships to stand out. They really can't afford to slow down.
So, thinking even bigger picture, what about the major economic forces? How does the macroeconomic environment, interest rates, inflation, impact a stock like SoundHound?
Yeah, the macro environment heavily influences tech stock sentiment, especially for growth stocks like SoundHound that aren't consistently profitable yet. For example, a high interest rate environment tends to hurt growth stock valuations. Why? Because their value is based heavily on future earnings, and higher rates mean those future earnings are discounted more steeply today.
Right.
So while hopes of Fed rate cuts are generally good news for tech, just the uncertainty about when or how much can still cause volatility. And of course, high inflation can squeeze companies by increasing operating costs, pressuring profitability further. These are external pressures they have to navigate.
And what about just the general feeling, the sentiment around AI itself? It feels like the absolute hottest investment theme right now.
You're spot on. Currently, AI is definitely one of the hottest themes, maybe the hottest. Investment dollars are pouring into AI-related companies, and that's been strong. SoundHound is clearly seen as an AI-themed stock, and it absolutely benefits from that strong market interest and enthusiasm.
Yeah.
But, and this is important, market sentiment can turn on a dime. If the broader market gets more cautious, maybe due to economic worries or just feeling valuations got too high, investors might rotate out of riskier growth stocks and into safer, more stable value stocks. That could pressure companies like SoundHound, regardless of their own progress.
Okay, so putting this all together, the business, the financials, the crazy volatility, the broader market forces, what does this actually mean for you, the investor? What are some potential ways this could play out for SoundHound going forward?
Yeah, we can think about maybe three main scenarios, each painting a different picture. First, the optimistic scenario. Here, SoundHound really leverages its unique voice AI, especially that on-device and hybrid approach. They gain a clear edge, become a standard through even deeper partnerships in their key niches like auto and QSR. This could lead to them hitting profitability sooner than expected as revenue growth creates economies of scale, especially from high-margin licensing and hosting. You might even see a potential strategic acquisition by a bigger tech or auto company. Or, leveraging that NVIDIA tie-in, maybe they become a really core player in the AI chip ecosystem.
Okay, that's the sunny side. What's the opposite?
All right, the pessimistic scenario. This highlights the risks. SoundHound could just get overwhelmed by the sheer scale of big tech Google, Amazon. They might struggle to keep pace with AI advancements, falling behind in new areas like multimodal AI or generative AI. Continued heavy losses could make it hard to raise more money, maybe forcing big stock offerings that dilute current shareholders. Plus, relying heavily on a few huge clients like Stellantis or major QSRs is always a risk if those relationships sour. And finally, that high valuation for a non-profitable company makes it super vulnerable if market sentiment turns or if interest rates stay high.
So high growth potential, but also significant hurdles. What about a middle path?
Yeah. The neutral realistic scenario. This suggests maybe a more gradual, possibly bumpier road. SoundHound likely keeps up strong revenue growth, expanding its customer base. At the same time, they'd be working steadily to chip away at those losses through cost efficiencies. But maybe true profitability takes quite a bit longer, several years. Potentially. They'd likely double down on their niche expertise, automotive infotainment, QSR automation, rather than trying to fight big tech everywhere. The stock itself probably stays highly volatile. A classic high-risk, high-reward play, balancing that AI growth story against the profitability questions and competition. And realistically, they likely need to keep seeking external funding for R&D and expansion, maybe through a mix of debt and equity down the line.
So boiling it all down, what does this mean for you, the investor?
SoundHound AI, it's a really fascinating case. You've got a company with undeniable significant growth potential driven by its tech and its place in this booming conversational AI market. But it's also clearly a story of high investment, ongoing losses, and, as we've discussed, considerable market volatility. It is definitely not for the faint of heart.
Yeah, and this really raises the crucial question for every individual investor. How do you personally weigh that huge potential against the current financial realities, the instability, and all the market risks we've laid out? You really need to carefully watch the company's progress towards actually making money, measure it against the competition, and keep an eye on that broader economic picture. Understanding these different scenarios, the good, the bad, the middle, can really help you align any investment decisions with your own tolerance for risk and your financial goals.
We certainly hope this deep dive has given you a much clearer, more nuanced picture of SoundHound AI. If this was helpful, please subscribe.